What's up, guys? TraderJud here, back with you with another video. This week's video of the weekly Forex Outlook, week number 13, where we go over 10 different Forex pairs, 3 time frames per pair, the weekly, the daily, and the 4-hour time frame. I just give you an outlook of what I expect to happen for the coming week. So, looking at EU this week, you'll notice on the weekly chart I have a Fibonacci retracement drawn. It's based off of this point right here in the ultimate low. You can see last week's candlestick was another strong bearish engulfing candlestick. We have multiple rejections of the 61.8 right here based off of this point, which is why I drew it right there. But yeah, last week's candlestick, another very strong bearish candlestick. It looks like it's breaking through market structure to the left. So this week has an opportunity to do a couple different things because it did respect this market structure down here. So what we're looking for is, if it continues to go bearish, we're looking for it to reach these levels, the 38.2 level down here, or potentially even lower than that. And if it does go retrace a little bit, which I do expect to see some sort of retracement, then we might get a retest, a double top on the 61.8, something along those lines. Dropping down to the daily time frame, looking at last week's candlestick. This was Friday, Thursday, Wednesday, Tuesday, and Monday. Monday was bearish engulfing. Tuesday was another strong bearish candlestick. Wednesday was also bearish. Thursday was bullish, but it was not engulfing. And Friday was bearish, but it has a large wick to the downside. You'll notice I have a few trend lines, I do have a couple of trend lines drawn, and I have a few these zones drawn. The zones are all pretty close together, so you'll notice when I drop down to the 4-hour time frame that there's not as many zones drawn. There's more horizontal lines. But the trend lines, you can see we had the break of the trend line at last week, and we have not had a retest of that yet, which makes me think that we could potentially see some sort of bullish retracement. Like I said, maybe retesting the 61.8 level, which is up here, which would make sense. Possibly even retesting this, or more likely, I should say, retesting one of these trend lines up top. That might not happen this week, but I do suspect that will happen, likely happen here pretty quick within the next few weeks. If not, then we'll be looking for it to continue down into these zones down here, or potentially retesting this trend line down here. Let's go ahead and drop to the 4-hour time frame. You'll see I took away most of the zones. The one zone that I do have drawn is based on this bearish engulfing candle right here. If we can zoom out, you can see why it's drawn. We have the retest right here, the double top inside the zone, the break, and then the retest of it, and then the price is currently in that zone right now. If price does break down below, it will have to travel, and the reason why I didn't draw anything down here is because there's multiple levels that it'll have to travel through. We could draw a zone probably based off of this level right here that does encompass most of those areas. Let's see here, we'll draw it wick to wick. So we can draw that zone and have price come down to retest that zone. There is the trend line. This is a daily trend line, weekly trend line down here, and then the horizontal low is based off of market structure right here and right here. So that's the reason for the horizontal line. I don't suspect price will get down that far this week. However, it could get down to this next zone down here, and then the following week we'd be looking for either a test of this horizontal line and or a retest of this trend line. So as I was saying, and what I think is probably more likely this week is with this this massive pin bar that we have right here, the rejection of this zone. I think we will see some sort of retracement to start the week out. Could see a possible retest up here and then a continuation downward. Price could bounce around between these few levels as it did over here. If you remember a few weeks ago, I drew this as a consolidation zone, and there has not been a retest of the consolidation zone. So we might see some sort of retest of that area, which I would mark it as either this one or this one. So that's a pretty significant retracement, and the way that we can get a better idea of where that retrace is going to happen, we'll throw a Fibonacci retracement on it and see where those levels line up at. Previous high to current low. We see that the 61.8 lines up perfectly with this market structure over here and right here, so that is a good likelihood that we could see that. The 50 also lines up pretty dang well with this level right here. And so we could see either a retest of the 50 or the 61.8 before continuing downward, which would be a retest of the consolidation area. So that's kind of what I see for EU this week. Let's go ahead and move on to UJ. On the weekly chart with USD JPY, last week's candlestick was this this doji with a long wick to the upside. You'll notice that not last week, but the previous week before that was a very strong bullish candlestick. However, this is still trending downward. I drew a Fibonacci retracement from the previous high to the previous low. We have a wick of the 50 Fibonacci level right there. That's a rejection of the Fibonacci level of the 50, and so that could mean that we're going to see a continuation now, a continuation down, but it's not set in stone yet. So let's go ahead and look at the daily time frame. You can see the hangman pattern with the bearish engulfing candle. That shows good significant strength of the sellers. However, the next candlestick was a pin bar down into this zone. The zone is drawn off of this wick to the body of this candlestick. We also have a zone up above where price is currently, and it is drawn wick to wick off of this candlestick right here. So last week's candlesticks, Friday, Thursday, Wednesday, Tuesday, and Monday. Monday was bullish, Tuesday was bullish, strong bullish. Wednesday was a doji, kind of spinning top. Thursday was bearish engulfing, and Friday was bearish but had a large wick to the downside. Dropping down to the 4-hour time frame, you'll notice I added a couple of horizontal lines as well as a few zones. The zone right here is based off of this bullish candlestick right here. The zone down here is based off of this. Let's drop more accurately. Based off of that candlestick over there, the bullish candlestick right here, and this trend line right here, and the trend line right here. You can see the trend line up top drawn point to point. Price is approaching that trend line, as well as point to point on this trend line up below where price is currently. And so our couple of options right here, if we're going to see a bullish continuation, then we will see a breakthrough of the EMAs and then a break of this market structure right here, continuing upward until these two horizontal lines, which are based on they are based on multiple retests, or multiple touches I should say, right here, and then same thing with this, multiple touches or rejections right here, and then all of these rejections over here as well. So you can see both of those horizontal lines have significant value, and they just so happen to line up pretty well with the other trend line, the trend line above where price is. So if we do see bullish continuation this week, then we'll be looking for price to approach these levels somewhere in this vicinity right here. However, if price does break below this trend line and below this this zone, then we'll be looking for more bearish continuation downward. I wouldn't consider this a selling market until market structure is broken on the 4-hour time frame, which you could consider this a lower low, I suppose. We want to make sure that a higher high isn't made. More significantly, we're looking for a break of this zone. I would feel much more comfortable selling after a break of this zone. But that's just me personally. So that's what I see for UJ this week. Let's go ahead and move on to the next pair. Next up is gold. On the weekly time frame, we have this consolidation box drawn that I've been drawing for a number of weeks now. See price broke out of it. This is the daily time frame, of course. Let's go ahead and start with the weekly time frame, and we'll get to the daily time frame. On the weekly time frame, so you have a Fibonacci retracement drawn. It's based off of this point right here to the ultimate low. And we can see multiple rejections of the 78.6 level. Rejections right here, rejection right here, and multiple rejections right here. And it looks like we could see this past week's candlestick was bearish. However, it has a significant wick to the downside, as you can see multiple wicks to the downside to the left as well. However, this wick did make a lower low, so this is the lowest point of this consolidation area. Now let's drop down to the daily time frame, where the consolidation box is drawn, and you can see price did break below this consolidation box and close below it. However, it did make its way back up into it towards the end of the week. So looking at this week's candlesticks, Monday and Tuesday were extremely bearish. Wednesday tried to be super bullish, but rejected the consolidation zone. It looked like that would have been a good opportunity for a sell. However, Thursday came back up, retested the EMAs, and Friday is currently residing in the zone. However, it has not closed above this bearish engulfing candle, which we would call the controlling candle. So that's where we are right there. And then this zone over here down below where price is drawn is based off of this wick and the candlestick body of the candlestick right next to it, to the right of it. And you can see multiple rejections throughout that, which is why it is drawn. Dropping down to the 4-hour time frame, and this is still a UJ, of course. Make it gold instead. Dropping down to the 4-hour time frame. I spent quite a while trying to find good areas to draw zones on this, and there just really wasn't any good opportunities to draw zones. We know that there's the consolidation zone towards the top. I don't believe price is going to make it all the way up to this area this week, which is why I haven't drawn anything. However, if it does break above this level, this zone that I have drawn right here, then I will update it with some other areas, some other levels, as price continues upward, if price continues upward. This zone that's above where price is right now is based off of this candlestick right here, this slightly bearish candlestick, the whole wick to wick. And you can see consolidation all around it, and then multiple rejections as we turn left. So that's why I chose to draw that zone. This horizontal line is based off of all the rejections on the bottom of the consolidation zone that was drawn on the daily time frame, and then this zone down here is based off of this candlestick, this red bearish candlestick right here, right next to the green bullish engulfing candle. So the one trend line I have drawn is just right below where price is. So what we're looking for with this is either a continuation upward, a break through the zone, a retest, and then continuation upward after the retest. If, like I said, if that happens, then I will update in my weekly charting Telegram channel. I will update charts for gold in that. However, if it does not break above and continues downward, which I'm thinking is probably likely for this week, I'm thinking that we should see some more bearish continuation. Even though the EMAs did just cross on the 4-hour time frame, I would be surprised if they stayed crossed. We could see some consolidation this week. That's a possibility, since this is a strong level right at the bottom of the consolidation zone. This horizontal line does show significant strength. So we could see something like a retest of this zone before continuing down, or something along those lines. But I do suspect that this will continue downward, and if it does, we're looking for a break of not only the horizontal line, but also the trend line, a retest of the horizontal line and/or the trend line, then continuing down into this zone down here. So that's what I see with gold this week. Let's go ahead and move on to the next pair. EURUD is up next. You can see I don't have anything drawn on the weekly time frame. That's because price is inside of these large wicks, and I don't want to draw a zone that is that large. But we can see EA has been trending upward for quite some time. However, last week's candlestick was bearish, and it did engulf, just barely engulf that bullish candlestick. Not last week's candlestick, not the week before that, but the week before that. Do have a double top as well that's relevant. Dropping down to the daily time frame, we can see the double top right here clearly. I've added a couple of trend lines, a few trend lines, and also a horizontal line based on market structure. You can see all the rejections to that horizontal line, as well as this one right here and this one right here. So we did get a break of this trend line last week. That would have been Thursday's candlestick that broke it. We did get a crossing of the EMAs as well. And so we might be potentially looking for sells, although I'm not selling this pair yet. If you didn't get in on the double top right here, then I would not sell this pair yet. But it's looking like if this level breaks, once this level is broken and retested, then I believe the sell will be on. Dropping down to the 4-hour time frame. You see I've added a few horizontal lines or horizontal rays, if you will, as well as a zone, and then this is the horizontal line that I was speaking of earlier. And as you can see, this trend line was broken on the daily time frame. It's drawn a little bit different. It's based off of this wick right here. However, on the 4 hour, I based it off of these two wicks instead. What you could do is you could also, and I guess I'll do it. You could also draw something like this, based off of that point all the way up to here. In which case you do see a break and a retest, and then a continuation down. I'm going to keep it like this though. Because that price was just broken, and because of the horizontal line that's drawn right here. This horizontal line is based off of these rejections right here, as well as the rejections, boom, right there. And you can see this area of consolidation right here, so that's another reason why I included it, because you have multiple rejections right here. And then we have this this zone, which is based off of, let me draw this more accurately. It's based off of this candlestick right here, and you can see multiple rejections of that. All of these rejections to the downside finally have broke through, retested, and now price is currently looking like it might want to retest it. So what we're looking for is, if this does go bullish, start the week out, then we are going to adjust this trend line down to here, and that will be our new starting point for this trend line. However, we are going to keep it right here for right now. So if this does go bullish, we're looking forward to at least reach this level, if not any of the levels up here. And if it does break through both of these levels this week, we're looking for a retest of the trend line at the very top. However, if it does go bearish, we're looking for probably what I suspect will happen is go into the zone, retest this level, and then retest this the weekly trend line, or the daily trend line, if you will, down here. If it does break through this trend line down here this week, then we're looking for a test of the horizontal line all the way down here towards the 156.250 levels. So that's what I see for EA this week. Let's go ahead and move on to the next pair. GN's up next. GBP NZD. Looking at the weekly time frame, last week's candlestick was a bearish engulfing. In fact, it engulfed all of the candlestick bodies of the last month. So that's significant. However, it is just going inside of the EMAs on the weekly time frame. So it's not confirmed that it's going to go bearish. In fact, it's not even close to being confirmed that it's going to go bearish. We did have this double top as well on the weekly time frame, so that's significant. But that doesn't necessarily mean that this week is going to be bearish. However, I do believe it probably will be bearish. I do believe that price will probably break through both of these EMAs on the weekly time frame this week. Looking at the daily time frame, we can see the significance of this past week. This is Friday, Thursday, Wednesday, Tuesday, and Monday. Monday started out bullish. However, that did not last long. Tuesday, Wednesday, Thursday, and Friday were all bearish. We're approaching this bottom trend line right here. I also have a trend line drawn on the top, as well as this horizontal line, which is signifying the rejection right here, as well as the multiple rejections right here, as well as the rejection right here. And it's pretty close to a rejection right here as well. So if you wanted to draw this a little bit differently, you could have drawn this as a zone off of one of these candlesticks over here, whichever one you choose, and it would have encompassed that, which is why I included it. I believe that it would also encompass that if you would have drawn it as a zone. I thought it was more appropriate to draw it as a horizontal line, so that's why I did it. Dropping down to the 4 hour time frame, you'll see I have quite a few horizontal lines drawn on the 4 hour time frame, as well as the zone, which is based off of this candlestick right here, this bullish candlestick right here, pin bar to the upside. You see price is currently in that zone, and the trend line is also in that zone. So if we see bearish continuation, if we see some sort of rejection of this trend line, then we'll be looking for a retracement up into this horizontal line up here. Possibly these levels down here. I didn't include those because I believe that this is probably more likely based on the rejection double top over here. However, I should add this, that these levels right here are also relevant, and so that's something to be aware of. You'll either see some sort of rejection right here, I would anticipate, if it does go bullish off of that trend line. However, if it does break that trend line and continue to go bearish, we're looking for a break and a retest. of the trend line and of the zone before continuing down to this strong horizontal line down here. But that's what I see for GN this week. So keep an eye on GN. It's in an interesting spot right now, but let's go ahead and move on. AUD/USD on the weekly time frame. Last week's candlestick was bearish. However, it has a significant wick to the downside. But you will notice that it did make a lower low. Slightly lower, but it's still lower. And so it did wick the 0.75, which is a quarter point. It's a significant level of price, so I would not be surprised if we saw bullish momentum coming off of that, because it is, again, significant. That's something to keep an eye on, definitely. For those of you that don't know quarter points, I suggest you join the Profit Society, because we can teach that to you, so you get a better understanding of what quarter points are. But moving on to the daily time frame, we can see last week I've got a couple of zones drawn. This zone right here is based off of this bearish candlestick right here. This zone right here is based off of this bearish candlestick right here. You can see price rejected not only that zone, but like I said before, the 0.75 level. Again, that is a quarter point. And so we saw bullish momentum coming off of that with the bullish engulfing candle, and then Friday's candlestick was also closed slightly bullish. However, there is wicks, significant wicks both to the upside and the downside. Looking at last week's candlesticks, Monday was bearish engulfing, Tuesday was bearish, Wednesday was this spinning top kind of thing, Thursday was bullish engulfing, and Friday was slightly bullish. And so that's significant, right? I have a couple of trend lines drawn as well. The top trend line has been broken but has not been retested. The bottom trend line is based off of a point down below as well as this point, and then I have this trend line up here drawn as well from point to point. And so I do think that we could see some sort of bullish momentum, possibly retesting the trend line right here or this trend line right here, which would be retesting market structure as well. Like I said, that quarter point is significant, so it's definitely something to keep an eye on. Looking at AUD/USD on the 4-hour time frame, we can see this huge wick that wicked the 0.75 again. We saw price dance around the 0.75 before going bullish. However, we do have this bearish engulfing candle right here. EMAs have crossed, and they are showing that the trend is bullish on the 4-hour time frame. For those of you that don't know anything about EMAs or want to better your knowledge on EMAs, I do have a moving average video on YouTube, so I suggest that you check that out. But if you understand EMAs, you understand the way that they work, then this is a rejection of the EMAs, a rejection of the zone, a rejection of the 0.75, and so it looks to me like this should continue to go bullish this week. However, we are if-and traders, so we do understand that if it does go bearish and breaks below this zone and this trend line, then we'll be looking for a retest of the trend line and the zone before going bearish more. However, I do think it's much more likely that we get a retest of market structure, a retest of this trend line, and a retest of the zone up above. So I am bullish this week on AU. So that's what I got for AU. Honestly, it's a pretty simple chart to look at, but I give you significant reasons why I think that it's going to be bullish this week. However, that's not set in stone, right? So I'm a reactionary trader. I wait to see what happens, and then I react, and that's the way that I trade. And so that's why I always give you the bearish and the bullish possibilities with every chart that I show you on this weekly charting series or this weekly outlook series. I give you the outlooks for both bearish and bullish, and then it's up to you, the trader, to analyze that and really know where to enter. So if you struggle with entries and you struggle with analyzing while the markets are open, again, I do suggest that you join the Profit Society, because it will significantly help you with entries and with understanding what you're looking at with this weekly charting series. But let's go ahead and move on to the next pair. GJ on the weekly time frame, last week's candlestick was a very strong bearish candlestick. The EMAs are crossing on the weekly time frame. However, the price has been bouncing around, so the EMAs have been going back and forth. Dropping down to the daily time frame, I have two trend lines drawn. One trend line is drawn from this point all the way down here to this point to where price currently is, and then I also have this trend line drawn from this point, and then it's currently right below where price is. Then there is this zone, which is based off of the wick to body of this candlestick all the way over here. You see multiple rejections of this zone where price is currently residing. Last week's candlesticks, Monday was slightly bullish. Tuesday, Wednesday, Thursday, and Friday were all bearish. The EMAs did cross on Monday and have spread pretty far since then. And so this week we will either see strong rejection off of either one of these trend lines, going bullish, possibly retesting this trend line up here. However, if we do get a breakout of this zone and a break below this trend line, then we'll be looking for more sells as long as market structure is broken. Dropping down to the 4-hour time frame, you can better see what I'm talking about. The EMAs have been spread for quite some time, trending downwards. These two trend lines are the exact same trend lines that I was talking about on the daily time frame. This zone is based off of this bullish candlestick right here, and this zone down here is based off of let's see here. I think it is based off of, it's just not quite all the way up, but it's based off of this candlestick, this bearish engulfing candle right here. And looking at where price is currently, again, just like I said on the daily time frame, price is currently just barely below that first trend line. We have had price has been slowing down. You'll notice that the second to last candlestick on Friday was a pretty strong rejection that closed as a doji / shooting star. So I would not be surprised if we saw some bullish momentum on GJ this week. However, I would also not be surprised if we saw some bearish momentum on GJ this week. We haven't had any significant retracement on GJ since right here, this bullish movement right here, and since it has broken and retested this zone, it has pretty much free fallen straight into this zone right here. So I would not be surprised to see some sort of bullish momentum, even a retest of this zone all the way up here before continuing downward. So what should you look for this week? If we do see bullish momentum to start the week out, then I'd be looking for buys. There's really not too many levels to be concerned with between the top of this zone and the bottom of this zone. Right, there is consolidation in these two areas. Right, we have significant consolidation here as well as some consolidation here. But I don't think that it's out of the question to see price jump this week from where it's currently at all the way up to here. However, if it does go bearish, then we're looking for, before I really and truly believe that it is going to continue free falling, I need a break of this trend line all the way down here. So you could possibly sell it if it does break, and you get some sort of retest of this trend line and or this zone, then you can sell it down to this trend line. And that would be a short, maybe 1-day trade more than likely, or maybe a couple of days, 2-day trade, something like that. But that's what I see for GJ this week. Let's go ahead and move on. AUD JPY on the weekly time frame, we can see last week's candlestick was bearish, slightly bearish, had not a substantial wick, but a wick nonetheless. It is currently sitting on market structure right here, as well as this huge wick right here. I did want to point out on the weekly time frame that there is this head and shoulders that has not completed yet. So I don't know if I would necessarily be selling this down to the like 72.75 level, somewhere around there. I don't think that I would sell down to that point just yet. However, this is something to just keep an eye on their long-term outlooks on the weekly time frame. Let's go ahead and drop down to the daily. There's also a inverse head and shoulders on the daily time frame, which is drawn. Last week's candlesticks were not too wild and exciting. Price was currently wicking the EMAs and the zone that's drawn. I do apologize. The zone is based off of a candlestick to the left, so I do not have that candlestick. But you can see the left shoulder and the right shoulder are currently rejecting it. This is not a time to buy, though. Let me just make that clear. There is no significant bullish momentum right now, and so I would not consider this a buy just yet. You can draw a trend line from here. Once that trend line is broken, you can buy it up until the neckline, and then if the neckline breaks, you're more than welcome to buy it up more than that. However, this is just a possibility. This inverse head and shoulders is a possibility and nothing else. You see Friday, Thursday, Wednesday, and Tuesday, they were all dojis. Dropping down to the 4-hour time frame, you can see why they were all dojis. It was consolidation, and then we finally had some movement on Friday. And so that's the reason why you saw all those dojis, because all of this little bit of consolidation gradually working its way down to the zone. It did finally meet the zone. You can see the inverse head and shoulders that I was talking about, but until this consolidation downward is broken, I'm not buying this. If you do buy it, this would be the point where you're looking to take profit at, or set take profit number one as this trend line. If it does break and retest this trend line, then you can buy up to the zone. However, if it does go bearish and continue to go bearish, and we're looking for a break of this trend line as well as a break of the zone, a retest of the trend line and or the zone before continuing downward to this horizontal line, which is based on previous market structure over here. And you can see why it's drawn that way. You could even move this down if you'd want, or if you'd like. I had it right here because of the multiple rejections right there. You could draw it as a zone if you'd like. All of those are acceptable, so that's something to keep an eye on. But that's what I see with AJ this week. It's a pretty simple chart. If this is broken, buy it. If it breaks down below and retests either the trend line or the zone, and you get a significant rejection of either one of those things, then I would feel comfortable selling it downward. So that's what I see for AJ. Let's move on. WDNZD on the weekly time frame, we can see last week's candlestick was bullish. It is currently in between the two EMAs on the weekly. On the daily time frame, I have one zone drawn. It is based off of this wick to the top of this wick. And I have this horizontal line drawn as well because of all the rejections in this consolidation area right here. And that's currently where price is. You can see last week's candlesticks. Friday was a strong bullish engulfing. Thursday was bearish but was not engulfing. Wednesday was bullish engulfing. Monday and Tuesday were both pretty insignificant. All of those had wicks to the downside, so probably enticing sellers looking for some sort of a retracement. But ultimately it continued upwards. Looking at the 4-hour time frame, you can see the consolidation zone much more clear now, and we can also see that the consolidation zone not only did it break out, but it has been retested, and then towards the end of last week continued upwards. So I've got a few levels drawn here. This level right here, as well as this level right here, this level right here is the same level that was drawn on the daily time frame, and all of these small levels down here where price could potentially find some sort of resistance. So I did draw this trend line as well. So what we're looking for with price this week is, I do suspect that it will continue upward. We're looking for a break of this significant horizontal line, possibly a retest before continuing upward. You could draw this as a zone if you'd like. I just couldn't find a good candlestick that I liked to use as a zone for that. Potentially this one right here. I went back and forth on that. I'll go ahead and draw it and show you guys what that would look like with the zone instead of the horizontal line. So you can see both. So there's the horizontal line, or the zone drawn. Either one of those is relevant. You can see price retested that as well. So we're looking for a break and a retest of the zone and or the horizontal line that was drawn before continuing upward to this level. I believe is going to be the next level that price probably reacts to. You can see rejection right here, a rejection right here, and then rejection right here, and then price attempted to break through but failed right there, and again attempted to break through but failed. Finally broke through, retested, and continued upward. So AN, I don't know how many people trade AN. I like following AN for some strange reason. It's not a really popular pair. It's just a pair that I look at every once in a while. It seems to move pretty well. You just get a lot of periods of consolidation when trading AN, so I'd stay away from it during periods of consolidation. The reason why I included it this week is because, like I said, the break of the consolidation zone of this 4-hour time frame and then the retest of it. So it looks good for a buy. However, be aware that if it does break below this trend line, then we'll be looking for sells downward. Now that's what I see for AN this week. Let's go ahead and move on. And pair number 10 this week is going to be UCAD. Last week's candlestick was kind of this pin bar to the upside. Did close slightly bullish, however, not significant amount of bullish momentum or bearish momentum from last week. So it looks like it should be consolidation. Going downward, we can see the consolidation that I was referring to. I have one zone drawn. It's based off of, I guess it's based off of last week's candlestick, which would make sense. It's based off of the wick in the body of this. You can see all of the consolidation that's happened to the left of that as well. So something to keep an eye on for sure. Dropping down to the 4-hour time frame. What we're looking for with UCAD this week is this is the consolidation zone that we talked about. The UCAD basically consolidated all of last week, which is not to be unexpected. We can see all the consolidation right here, and then all of the rejections right here. So I do think that this is priming up to be a sell. However, this is still a flag pattern, so be aware of that as well. Once this consolidation zone is broken out, either to the upside or the downside, you can buy or sell respectively. The trend line right here, let's make sure that's touching. Trend line is based off of this ultimate high, or the most recent high, I should say, and this candlestick from, not the last candlestick, but the candlestick before the last candlestick on Friday. You see we have multiple rejections to the upside to this zone, and prices stayed relatively below that. However, we do have multiple rejections to this horizontal line down below as well, which is why I included it. So either way, we're looking for a break and a retest of either the upside or the downside. If the break happens to the upside, we're looking for at least these levels right here, if not higher than that, possible double top or something along those levels. However, it does break down below. We're looking for a retest of that horizontal line and then continuation down to this this zone drawn down here, which is based off of this bearish candlestick right here. You can see multiple rejections of it, which is why it's included. So yeah, that's what I see for UCAD this week. I'd like to take a second to thank everybody for watching. This is week 13 of the weekly charting series. And also a reminder for those of you that are unfamiliar with my background, I do teach for the Profit Society. I am a teacher there. And we are running a special right now, so I'm going to mention that on here. We're actually running half off. Until May 14th, you can join the Profit Society for half off. The code for that is uppercase A, uppercase H, uppercase A, uppercase L, and uppercase F, and then OFF, all lowercase, half off, to join the Profit Society for half off. So if you're enjoying watching these weekly charting videos and you want to learn more about how I do this and understand my approach to trading and all of that, then I do suggest that you join the Profit Society. It is an academy. It is fully a full A to Z academy to learn how to trade, right? And so we don't just focus on charting, we actually focus on trading and mindset and all of those things, but we start from square one and we build you up from there. And so if that's something that you'd be interested in, go ahead and check out either the video that I posted last week explaining what the Profit Society is, and or you can check out the www.theprofitsocietyfxc.com, which is linked in the description down below. If you have any questions, feel free to comment them down below or reach out to me on Telegram. I'm always available on Telegram at TraderJud. And yeah, so again, thank you for checking out this week's video. Hit the thumbs up. If you're not subscribed to the channel, go ahead and hit subscribe. I've got videos coming out every single week, at least one video a week, this being the one video a week. But I'm working on multiple projects. There was not a crypto charting series video last week. However, I'm thinking that there will be one this week. Just not getting a lot of traction on those videos. So if you do like those videos, hit the thumbs up here. Show that you want to see the crypto videos for next week, and I'll bring it back. However, if it does not gain any more traction, I'll try it for one more month. I'll do 4 more episodes, and if we're not getting the views on those, people just aren't interested in trading cryptocurrencies, which that's fine. You know, I don't have any problem with that. Cryptos are a crazy world, but it's very potentially very profitable. So, and I think that's the way that the world is going, the economy is going. I think within the next 20 years, cryptocurrency will be the main currency. I don't think we'll have a global currency, but I think nations will be run on cryptocurrencies rather than, or should I say that national currencies will be converted into cryptocurrencies instead of holding dollars and cents. You'll have a national cryptocurrency that's endorsed by the country, the respective country. But that's an entirely different video. So I'm out. Thank you guys for watching. Have a good week, and yeah, thank you.